Welcome back, Bruce. For the benefit of new viewers, can you tell us a little about your firm as well as your investing track record?
Yeah, at StoneCastle, we have a top-down and a bottom-up approach. And so our top-down, we're really looking to figure out whether or not we're on offense or defense at any given time. And then our bottom-up helps us to actually pick the individual stocks in our portfolio. We've seen a fairly significant change in the top-down just over the last 4 weeks in our strategy, where 4 weeks ago we were very defensive and had a high level of cash, somewhere around the 50% level. And over the last few weeks, we've seen the indicators sort of one by one improve. And as that's happened, we've moved our cash level from the 50% level up to only around 10% cash now in the portfolios.
So what sectors do you think are poised to outperform in 2016?
Yeah, there's a lot of different cross currents going on right now. It looks to us that maybe this energy, materials, precious metals is obviously been breaking out and looks like it has some further legs to go. As well, we continue to like the healthcare space. We think that there's significant earnings power in that area, and then there's select technology names that we like as well.
The last time we spoke, you mentioned you like patient home monitoring. Given that the stock has suffered so much in the past year, would you still be buying at these levels?
Yeah, so patient home monitoring is being a real challenge for investors. Part of our process is we use technical analysis, and so it actually got us out of the stock at higher levels than where it is now. But that being said, we think there's fairly significant value in patient home monitoring. We haven't stepped back in yet, but we're certainly watching it very closely. The business is had a few challenges with Medicare cuts, but overall that business is a growing business. Healthcare services in the U.S. are going to continue to grow. The management team's done an excellent job in the past with their private company growing, and we think that that's going to transpire in patient home monitoring, but it's going to probably take them a little while just to get the use of running a public company and being really familiar with good corporate governance and also good corporate communication.
You've also mentioned you're a big believer in the medical marijuana sector. So what stocks do you think will do well in this space?
It's one of those areas that we think is a real long-term growth area. So, over the next 10 years, we're going to probably see evolve from medical marijuana to recreational marijuana in some capacity. And so, we look at sort of all the legalized producers right now of medical marijuana as really having a head start on the business. So the ones that we particularly like are the ones that are cash flow positive right now. So, that would be Organigram, which is run out of New Brunswick, and then Afria, which is a big greenhouse operation in Ontario.
Can you tell our viewers any of the stocks that you currently like?
One is Nobilis Health, which has had quite a rough ride in the last year. They're in the surgical ambulatory care hospital business down in the States. They continue to have great cash flow. They had a lot of kind of negative things happen to them. They had a short report. They had an auditor issue. They've really cleared both of those up, and it looks like that stock has more room to go here as far as both cash flow growth and also acquisitions. And then the other one that is kind of interesting is one that we've just recently gone into, which is Red Eagle Mining. They have a mine that they're building in Colombia, which is not an area that most people really equate to gold mining, but it's an area that's been mined for about 400 years now. Red Eagle's just in the process of finishing the completion of the mine build, which should be probably sometime around this summer, and they should start actually pouring gold sometime in the early fall. And that's one that isn't really on the radar screen of most of the analysts in Toronto. It's not covered by anyone, and it's one that we think has some significant room to go.
Thanks for taking the time for today's interview.
Yeah, thank you.